Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is working. Hope everybody's having a pretty good morning so far. Hopefully your trading's been going well. We've got a little fun trade going on that euro pound. We'll talk about that and just some other good stuff that's happening. A lot of good stuff to share with you guys today in addition to the banker's close. So awesome. Looks like we're up and running. We'll go ahead and get started. Let me go over our disclaimer. As always, I just need to remind you guys about the risks involved in the market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. Okay, awesome, guys. So in terms of news, we have we just had that pound GDP this morning. And obviously it's a bank holiday here in the United States. We've got Veterans Day. But other than that, there really aren't any other significant news events that we should be aware of. So, and even the pound, I think, is fine to trade if we want to. But I might try to find opportunities on like the Euro franc, or say like maybe we'll try, whatever else we can find. But nonetheless, let's see what we can get into right here. Let me pull up my scanner so I can be aware of what we're doing, see what opportunities we have. Okay, let's do, here we go. Okay, so at the moment, yeah, we don't have anything lining up on our favorite currencies. Technically, the pound dollar could be an opportunity to short. Let me take a look at that one. Or even the euro dollar could be one that we could do today. Yeah, for a banker's close option. Yeah, well, let's see. This is on hourly. It's a much higher time frame. Let's take a look at the euro dollar real quick. That is a runner. Honestly, I want to stay away from the dollar if I can, just because of the CPI that came out yesterday. We're seeing follow through from that news event. How about the euro CAD? Let's see. CAD francs lining up too on a 5-minute. Yeah, I might do this euro CAD. I'm gonna grab this. I like this one. Just gonna grab a couple of trades in here. Just get a starter position. That's all I'm looking for. So I like this one. It's hit the upper Bollinger Band. There's no news on either one of these pairs. We are at if you go to the hourly chart, we're on a pretty big high right now. Yeah, we're just surpassed this old high. And that doesn't mean that necessarily the market can go beyond that. Just to be clear, like it totally could continue to the upside. But I like that we're at the end of the trading day. There's no news, at least in the last 12 hours, on either one of these currencies. And we have had a pullback so far. Like the market's showing that it is willing to pull back right here, as you can see. Whereas back here, who knows when it was going to pull back or if it was going to. So I like those things about this pair. It's also retesting this old high. So I like it. I like it for a banker's close. So we'll want to close our trades kind of in this area, at least the majority of them. right around the mid Bollinger Band, and then obviously leave a trade to ride. And then I like to, when I'm this early in the webinar, I do move my stops out quite a bit because I am willing to work with the market. You know, if the trade goes against me, I'm willing to work with it and add to the position as needed. But you know, if we get closer to the webinar and we haven't taken profit, then I'll bring those stop losses in towards the end, right? All right, let me go ahead and pull up our, here is our, obviously this is the start of the hour. This would be the end of the hour right here. So this is your hour to add to the position. While I let these guys cook, actually before I let these guys cook, I do want to leave a couple of trades to add to the position. You know, if this rises, I do want to kind of build into the position just a little bit. I feel comfortable with that. Yeah. Because what I'm going to do is I'm going to go recap some of these other trades that we took. And so you might want to do the same thing unless you're going to, if you've got another screen to monitor, great. But I'm just going to let these trades kind of cook and do their thing this morning while we go look at, you know, the euro pound and some of the other stuff that we've been trading. That's the one we're going to let ride. Yep. Okay, sweet. So let me show you, I sent out a trade last night on the euro pound. It was a little bit of a different trade than what you and I are normally taking. I have to go to I think an hourly chart to see this. Actually, I think I took it on a 15-minute chart. That's how I based it. Yeah, it was on a 15-minute. So, okay, so here's what's going on here. So yesterday, I found the euro, let me delete this. I found the euro pound trading. I was looking at all the different currency pairs looking for setups, you know, swing trading setups. And I found this really awesome trade here. So essentially, if you look at the overall, this is how I start. If you look at the overall trend of this market, it is up, okay? And so you know, it gets these impulses to the upside. Sure, it pulls back, but it is getting these impulses to the upside. And then if you come over here and take a look at this old support level, something that I've learned, in fact, maybe I should start with this. Yeah, let me start with this concept. Sorry, I want to make sure I explain this right. So let's go to the whiteboard here or the blackboard here, right? And let me draw an example for you. So let's say the market is forming a consolidation. So, you know, you've got this and it's just this and this and this. Okay. This is a pretty obvious resistance up here, right? And then this is a pretty obvious support right here. When retail traders see this, they what they like to do is they want to, you know, sell at the top, buy at the bottom type of thing. And for the most part, that can sometimes work, right? But the banks also see this phenomenon, and what they see behind closed doors is they see liquidity, right? Liquidity, liquidity, liquidity. And so the type of liquidity that they're looking at is, you know, if a retail trader wants to sell, let's say at the top of this resistance, we'll say put a sell there. Where's the average retail trader going to put their stop loss? Well, they know it's going to be right behind this support, right? Or resistance. There's a ton of money in this area. I'm just going to say, I'm going to call these buy orders, okay? Because why are they buys? There's a ton of buys up here. Because when you hit your stop loss on a sell, that's a buy. You bought. If you sell the market short, if you close out that short, even if it's a take profit or at a loss, you have to buy, you have to subsequently buy to cover your short position. Okay. And so whenever you think of stop losses on a short position, think of buys. Those are buys. Whenever you think of a stop loss on a buy, that's a sell. So there's a bunch of buy orders up here, okay, like a ton. And you're taught to buy low, sell high. Well, that's the problem, is the banks know that you're going to buy high if they can get the market up there. And then down here, the market has a lot of stop losses as well, just below the support. What kind of stop losses are these? These are stop losses on the buys. And so these stop losses are basically sell positions. These are shorts, okay? Because in order to close out a buy position, you have to sell. Okay, so there's a lot of liquidity of sells down here. So the banks look at this and they say, let's see if we can, let's say their overall direction is to the upside. We'll just make an example to the upside because we've been doing a lot of buys recently on these swing trades. So, what they'll do is they'll come back down to the support, but they won't stop there. They'll intentionally, they'll actually sell in order to knock all these people out and hit these stop losses of liquidity, which are subsequently sells where they can come in and buy. So they'll buy up all your stop losses. Okay. And then what happens is it comes back up. But if you remember, I said earlier, they still have this sell position that they have to mitigate. And that's where this comes in. The mitigation part of the plan is to bring this back, basically to break even on their sells. And then they'll close out the break evens on the sells. But what do they still have? They still have your buys that they picked up right here. Your buys, their buys are your stop losses on a buy order. Okay, because you shorted in order to make that happen, in order to cut your loss, you shorted. And so they end up picking up these orders. So now what they can do is, now that they've mitigated the position that they don't want, they've now got the bag of trades that they want for the overall direction they want to go. Now this can happen. And it can just keep on going, And heck, I don't know exactly what would happen with these. Maybe they do something with those too, but if their overall direction, maybe they don't care about these, but all they care about is their overall direction and how do we fill these orders. And they know that they can fill the orders if they do this, right? So, which is kind of crazy to think about, right? Oh, and that's the other thing too, is if you are a seller here and you hit your stop losses, this just furthers the breakout because you have to buy. Remember, these are all buys. So if you hit your stop losses, you just bought the market, furthering this and accelerating that move right there. Yeah. So yeah, so anyway, it's a really interesting concept. So what I did on this euro pound, if you guys want to come back with me down here, is that exact thing. So this market is in an overall uptrend. It formed a consolidation or a support level right through here. You can see it was a lot of support right here. We had a lot of support right here. And then what the market did is it actually broke through that support, hit a lot of stop losses from people that bought right here, right? And they also bought, I'll zoom in. People also bought right here. And then they do this little thing where they drop the market. And what I've learned, and I've learned this from a lot of different traders, maybe you guys are familiar with this, but what you want to do is you want to look for the most recent candlestick that before this market Like what was the candlestick that pushed the market down before it went up? What was the last one that did it? And there's a couple of options here. Like you could pick, I think I may have picked this guy as the last bar down before that move went up. You could also pick like, this kind of area right here. There's some candlesticks you can pick, but honestly, I think I took this on an hourly chart. So if you look at the hourly, it looks a lot better. So you're looking for that phenomenon where they break out, and then you're trying to find the last candlestick down before their breakout. And I actually don't know which one I chose. It might have been, I thought it might have been this guy, honestly. So what I do is I place a buy order on that candlestick body right there. So I'm just waiting for the market to come down, hit that, and then subsequently send the market higher after it hits that. Why am I doing that? Because they've now had the chance. This is their mitigation, right? Like this is the mitigation zone. So they sent the market down. They don't really want to go down. They want to buy, but they sent it down so that they could make this possible, where they could stop everybody out. And so this is where they're willing to break even. That's their supply zone. And you can even see, there's a wick that literally came down right to it as well, which just further shows that the market doesn't want to stay down there. It did come back, and then this is where I got in yesterday. So I'll delete all this stuff. So I put a buy order in there, and my drawdown was pretty not bad, right? Like I lost a total of well, I was down at most 14 pips. My stop loss was like 18 pips. So I got pretty close, but I never actually hit it. And now I'm up 63 pips on this trade, right? And it's all from that concept I just showed you. There's another trade I took last night. Let me show you. Actually, how are we doing on these trades? Okay, so the EuroCAD broke up. Let's see if we need to do anything with those. Well, it's just adding as it goes up. That's fine. That's fine. All right, so I'll just go back to it real quick so everyone's aware of what we're doing, and then I'll show you another trade that I took, and then more trades that we're going to take. And then I sent out a signal late last night. That one actually didn't work, but it's fine. I'll show you why. A couple of things. One, this trade's doing really well. Like I'm up almost 2% today from these types of trades. But let's come over here to the 5-minute on the EuroCAD. So yeah, like I'm just adding as it comes up here. Like I'll add another little trade if it pops up a little bit more, right? Like I'm just adding to it as it comes up, but slowly. Like these are small trades, right? The reason why I can make this work is because I have small trades on, right? Otherwise it would not work. All right, guys, so let's jump over to the pound Kiwi. This was a huge trade for me last night. On my other account, I made $1,014 on this trade. And I'm up right now on that euro pound on my other account, my FTMO, I'm up almost $700 on that trade, which is awesome. I did lose. I sent out a trade late last night on the pound yen. I'll show you that one too. I did lose that one, and I lost how much? I did lose $408 on that one, which that one stung a little bit, but I think it's really awesome though, because there's a lot of really good trades that we took. But I'm going to show you guys this setup right here. So basically, I like to do this on an hourly time frame or a 15-minute chart, just because I feel like you're still trying to make income every day, which is awesome, but it's also in line with kind of what the banks are doing. Like if you're on a 1-minute chart trying to find these, it can work, but I don't think it's in line with what the banks are doing, right? They're taking these positions. They're kind of the swing traders. They're holding, they're speculating these moves, right? And so I think that's kind of the better approach. All right, so if you come over here, here's the pound Kiwi. So last night, here's where the market was. Obviously in an overall downtrend, right? You can go back and look at that. And then, we had a really nice support level right here, or resistance, excuse me, really nice resistance. And then what did the market do? Well, it broke above it and stopped everybody's stop losses right here. Absolute mayhem, right? What's up here? There's a lot of, if you're a seller, there's a lot of buys, or excuse me, well, so for the retail trader, you have a lot of buys. I don't want to say you, but like the average trader who trades support and resistance has buys up here. And what that does is the the banks know you have something they want. You do have something they want. You have the these sell orders. They want them, but you're not about ready to give it up. You're not going to give it to them. So the only way you'll give it to them is if you hit your stop loss, which would be for you a buy, for them it's a sell. So let's just kind of change our mood on this, the way it looks. So for the banks, they see up here as a bunch of sells. For you, it's a bunch of buys. But for the banks, they have all these sells up here. They can see that you're a seller, right? And they're like, oh yeah, let's go take that out. So they knocked it out yesterday. They knocked everybody out. But again, how were they able to knock everybody out? Well, they had to actually be a buyer to knock everybody out. Okay, they had to knock everyone out. So they had to kind of compromise and go with the market in a way. Okay. So now they got all their sells from you since they came up here. So now they're actually left with a bag of sells and a bag of buys. Now, ultimately, they just want to be left with their sells, right? So how do they get left with their bag of sells? They need to mitigate the position that they didn't want to keep, the buy position. It was just used to steal. They just used that buy order to steal from you your sell position. So they come up here and get that mitigated order. So what I've learned to do is you want to put your order, your sell order at the top, or excuse me, at the body open of the last candle before the market came down. So if I zoom in, you'll see it was this candle right here. So you'd want to put a sell right there at that line, and then your stop loss would be on the other side of this line. So this is kind of how it would look. Well, I think you can do it a couple of ways. You can actually just put it at the wick, just put it at the wick of the other line, but the body right here is where you'd want to have your order to sell. So we come along, and then right here, just last night, we get that right there at 12 p.m. Actually, no, this was this morning. This was about at the New York Open. That happened right at the New York Open. And so again, you can afford to have a tight stop loss because they already got their sells. All they're doing before they send the market down is getting rid of their they're just getting rid of their buy order. Now that they have no buys, they just have a sell. It's time to go. And then this happens, and I made over $1,000 on that one last night, and 100 and something pips. Okay, let me show you another one that didn't work, because obviously it doesn't always work, but that's pretty awesome. So I did do the pound yen, and it's kind of my fault for trading against the trend, right? Because overall this is down. I guess it was up. Well, it's just kind of in the middle, right? But it was down overall. If you look at since October 27th, it's been down. So I came over here and, I saw that there was this support line right here. And I thought, I bet you a lot of people have their stop losses right behind here. I bet you the market will try to, come down and hit this stop loss like it did and then come back up. And I wonder if the market will want to try to go up from there. So with this one, what I did, as you guys know, I said, okay, hey, there's the support. This was the last down move before it came up, was this candle. So you put a buy right there and a sell just behind that. So the order would look like this. So buy order right there and a sell order or a stop loss order right there. And at first it worked out just fine. For a little bit, I was up, 50 and 60 pips. And then this happens, right? And boom, comes down another 200 pips, which is good that we got out when we did, right? Take the 45 or 50 pip loss, right? Just cut that trade loose. So that can happen. Like you can have a losing trade. Let me show you the greatest trade of all time, though. This is a trade I took a day or two ago. I made 600 pips on this dollar yen just the other day. Let me show you exactly how I did this one. So this one I did on a 15-minute chart. But very similar thing. Overall downtrend, right? Before this happened, this big move. Okay. Overall downtrend. I'm looking at this, I'm zooming in. This is a couple days ago. What I'm looking at is basically this was, at the time, this was the old resistance right up here. This was resistance kind of up in here. And this was the last big move to the upside. This was the last candlestick up before it came down. Okay. That's called a banker's candle. And then what I did is I came in here, put a sell order right at the body open of that candle, right? And put a stop loss right at the top of that, right? And that would be the trade. So why would I do this again? What's the science behind this? So basically, you have a market that's overall down, has a move to the upside, right? Trying to knock out anybody that's selling. They want to hit their stop losses, because for you that's a buy, but whenever you buy, somebody has to take the other side, right? Whenever you sell, somebody has to take the other side of that. That's what a market is, right? So on this trade here, specifically, the market went up, knocking out all these stop losses, right? Knocking out tons of stop losses up here. And then ultimately, the market was ready to come down, right? So actually, so this is part of it. I mean, there's multiple things happening here, but ultimately what I did is I just said, okay, hey, there's the candle that I'm looking for. And then later, coming into the next day, this happens right here, right? You get this move that comes right up to that last candle, can trip you into that trade. And again, so if you're a bank, where's the bank at this point? So what have they done already? So they've already knocked out sellers, right? They've knocked out the sellers and then took your sells from you. So you had to buy with the stop loss so that they could take your sells. That's what's happened so far. It's come down. Maybe some profits could be taken, but if you remember, how do they create this candle? Well, they have to buy in order to create a move up, right? So they have to send the market higher, which they did. They sent the market higher. Ultimately, after they sent the market higher, they have to come and break even on those trades. They have to they have to mitigate that essentially. Okay. So now that they've come back up to mitigate, this is the mitigation move. They now no longer have any buys. They've liquidated the buys and they're only left with sells. So now they're ready. boom, this happens, right? And that was a news event, to be fair, right? But it's the same exact concept. Let me show you another one that I'm in right now. This one was not a signal, but this is another trade. I'm up I just passed $300 on this trade right now on my other account. And then we'll go back to that EuroCAD. It looks like it's improving slightly. So we'll go back to that one. There's another trade I'm in right now on the Euro Aussie. In this account, I'm only up $27. But across multiple accounts, I guess I'm up quite a bit more. So this trade right here is overall in a uptrend, at least on the 15-minute. Let me see the hourly. How's it doing on the hourly? I don't actually know how it's doing over here. Yeah, it's still overall in an uptrend. Okay, this one was just beautiful. Absolutely beautiful, this trade. So basically, go back and look at the structure before all this stuff happened. Lots of support right through here, right? You've got support, support, support. Everyone in the world can see this, and the banks look at that and they salivate, right? They get really, really, really excited. Okay. And then the next thing to happen here is after they see that support, they're going to want to send the market through here. They're going to want to just go straight through it. So you can see this market comes straight through that support line. Why did they do that? Why did they send it right through support just to come right back up? What's the mentality? So retail traders are buying. You have something. If you're a retail trader, you have something they want, right? You have the buys. They don't. They want your buys. How do they get them? They have to get you to be willing to sell your buy at a loss for them to take it from you. Okay. So they can hit your stop losses right here. A stop loss on a buy is a sell for you. For them, they just got your buy. So you're selling, they're buying. They've now got these buys. But how did they make this happen in the first place? They had to sell this in order to make this thing bust through that support. They actually had to sell their position to make that possible. So the next thing that happens after they've picked up the bag of buys that they want, that's only half the process. Half of it's done. Okay, great. We got the trade we want, but we're left with this other trade that we don't want. How do we mitigate the trade that we don't want? Okay, we move along. We have to come down and, what I like to do is there's a couple of places here you can do this. I actually have a buy that hasn't triggered yet. That's on the candlestick. That's on the candlestick just before it broke out. So I have one right here. That one has not triggered. This one's triggered and is now positive. So on this guy, you can see this was the last mechanism or candlestick that caused this breakout. So that's a liquidity zone. So I put a buy just right there, assuming, okay, if the market's going to come back, they're going to liquidate and mitigate their position right there. They could also do it right here. I'm not sure which one they were going to do. So I did both with, obviously you can afford a tight stop loss with this type of thing. So I put my buy right there and right here. So far, this has been the only one that's triggered. So, and then now we just wait. We wait for them to come back and mitigate. So far, they haven't done it. And then boom, they do it right here. And I hop into the trade. And now I'm just waiting for this thing to continue to ride. So that's the concept in a nutshell. And so you can see how I can get away with a really tight stop loss, right? Because you're just looking where their liquidity zone is. And you're just putting the stop loss on the other side of their liquidity. Now, other people ask me like, why would you do that? That's like such a tight stop loss. You're going to get knocked out. Well, since the dirty work has already been done, since the manipulation has already happened, That's how I get away with a tight stop loss. Now, if you're just putting stop loss behind support that hasn't been broken or manipulated yet, yeah, it's a recipe for disaster. Like, you are going to hit that stop loss. And don't get me wrong, like, you guys will see, and you've already seen, I do hit my stop loss on these all the time. Fortunately, they're tiny. And so when you do get a runner, it just covers, everything. But I'm going to let this guy run. If he stops out, I'm down and I'm good to go ahead and try this last spot right here. And then if it doesn't work, then I know that that wasn't a liquidity zone. The banks don't have an interest in sending this higher, and then I would be done. All right, so that's the concept. So hopefully you've seen several of these examples so far, and you guys can come back and watch this recording to see some of these examples that I just showed you. Let's go back to that Euro Aussie now, or Euro CAD, to manage our bankers close trade today. Yeah, I'm pretty excited about this. Well, I'm going to let that Euro pound trade run. That is a signal I did post. Hopefully you guys were able to catch that trade. So this guy has gone on a breakout. That's fine. So back to bankers close talk over here. So when this happens, where it just kind of continues, I had a feeling it would do this. It's fine. So I like to identify, where did the signal initially begin? Well, the signal started right here. I guess technically right here. I've noticed from my time trading this, most of the time the market will regress back to wherever the signal started. Now, this can take some time. Like, you can actually hold the trade over the weekend on some circumstances and wait for this market to come back and close right here. I guess technically the signal started earlier than that, right? Because this was our original setup. So what I do is I just bring all my take profits to wherever that original signal started. And usually I can hit all of these. I don't like it when it does this type of phenomenon, but it is kind of what you sign up for with the banker's close. Sometimes it does this, sometimes it doesn't. I feel like half the time it just goes on a tear to the upside like this one did. And then the other half of the time, it just pulls back really nicely. It just pulls back immediately. I will be honest, I tend to make more money on this type of a trade though, even though you do have to bear a little bit more of a drawdown. The reason why I tend to make more money on this type of a trade is because, yes, I am adding to the position as it goes up. And so I actually get really good pricing up here, because when it pulls back, you make a lot of money on the other side of this. The question is if that will happen this afternoon. Will it happen? Do I have to hold this over the weekend? I don't like to do that, but I'm willing to do that if I have to. But yeah, so this one might take a little while. We have another 20 minutes left until the end of the banker's close opportunity. Oh, I guess technically, no, this was the original. No, yeah, that's it right there. Why is this being weird? Oh, here we go, right there. So we have until here to continue to add to the position. After that point, you don't add anymore, and you just wait for the market to come back, hit your targets down here. But yes, so and let's see, did anything else line up? The euro pound really didn't line up in terms of a banker's close. I know we're in that right now on a signal. It's kind of funny, like if you look at my pips right now, you can see this 107 pip loss. That's mostly from the pound yen last night that took that loss. But it was a smaller trade, and it was kind of later in the evening, so I didn't really go hard on that one. I did take a bigger position on this euro pound like 2.5 times bigger. That's why that trade, it's only up 65 or 66 pips right now and $192. So it's kind of funny because I'm up 2% on the day, but my pips are negative, right? And it's just because, I on the trade I felt really good about, I put a bigger order on, and then some of these other ones, like obviously bankers close trades too. We take a lot of little trades, and so we either make or lose a lot of pips. But the amount of money that's made on these trades, it just depends. Like you can have days where you make a lot of money on the bankers close. Like if this comes back right down right now, yeah, we'll make a good amount of money on this trade. But yeah, these swing trades and these overnight trades can make quite a bit more just because you're looking for that bigger swing move. Yeah, you can see all of them. Like I've only got a couple that are up right now, and then a lot of these are down like 20 pips, but they're only down like $3. The ones that are down quite a bit. And then like you can see my Euro Aussie's up $23. It's a little bit of a bigger trade, but not by much. But yeah, so we'll let this guy do its thing. Looks like it may actually start, it's starting to come back a little. So this is kind of me like being like a bank here, hey, we're wiping out all these stop losses up here, guaranteed other people have their stops up here. So the market sent the market maker sent the market a little higher, and now they'll probably pull back at some point, hit our targets down here. The thing is, I'm not looking for a longer term sell. I'm not looking for that sell that I'm going to hold for several. I'm not looking for a sell that I can hold for weeks or days at a time. This is just, hopefully this trade's just for today. If not, I will hold this trade into Monday. And then I'll show you how I'm going to manage that going into Monday. But yeah, that looks good. I can show you guys if you're interested. I've got some other trades that I'm looking to get into. Like I have a couple of trades on the Euro Kiwi, same similar concept. I might even post it as a signal. I just need to do some more due diligence before I send it out. I really do try to send my best trades out as signal alerts. But even it's funny, sometimes the trade I think is going to be the best ends up being the worst, and then trade that I'm like, it's a setup, but who knows, and it's like a banger trade. It's like the best trade ever. Right? Fortunately we did get a really good trade on that euro pound last night. So let's do this here. So let's go back to a hourly. I can show you what I'm looking at over here, what I'm watching. This is kind of overall in a downtrend recently. So I am kind of pushing this a little bit. That's why I'm not totally sure I'll make this one a signal, but I want to show you the concept nonetheless. So back here, you can see this was the last candlestick that sent them before the market went higher. Let me show you here. This was the last bigger candlestick, right? Before the market went up. Okay. So that's called a banker's candle. Okay. And it was this mechanism that caused the break in structure. It's whatever happened here is what caused this. It's stuff we need to pay attention to, right? Like if you're trying to make hundreds or thousands of dollars on a trade, like we gotta get good at this. We need to know what this means, right? So this is interesting. Like why, ask yourself this question: why did the market break out in such a hard way from this level? Like what caused this phenomenon to happen? And it's, hey, the bank's liquidity zone. So anyway, coming back over here, that's why I put a buy right there. My stop loss is on the other side of the body. Honestly, I should probably bring that stop loss down a little more, but I have another trade ready to go just below that. So I'm thinking, I'd rather stop out early. I'm trying to keep these losses super small. So yeah, if you come back over here, you can see I've got this buy order right here, and this buy is on the candlestick body of this last candlestick before this move higher. Okay. And if you go back and look at some of these, you can see, this phenomenon taking place. You can go back over here, this big move down. This knocked out all the stop losses right here. Technically, this was a banker's close candle that already happened. Like, this ship has sailed in a way, but I think it could be an opportunity yet again. So that's why I'm kind of like holding out for that. Ideally, we should have taken this trade together on this bar right there. That would have been the ideal candlestick to trade. Well, it would have been based off of, we would have entered on that bar, and it would have been based off of this last candlestick, either this guy or this guy would have been the entry. And actually, I don't know if you would have been able to hit it on that one. You would have been darn close though. Let's see. Yeah, you would have been, in order to hit it, you would have to have been at least there. So that one was really close. You'd almost have to be right on the trigger to make that one possible. But that's what I'm waiting for now. So, if the market pulls back into here, this is a liquidity zone based off of this mechanism right here. That would be a good place to buy and then hold. Honestly, I should bring these targets up to here. And what I do with these targets is I like to try to place these around the next liquidity zone. So right here, this was the last candle to the upside. That's also called an FU candle, right? I won't explain why. Maybe you can detect by yourself, but that's an FU candle. And that would be a good place to put your take profit right there. Okay, so that looks good. So that's another trade that I'm thinking, oh, I'm taking it by myself, but I might post it as a signal. Again, I'm trying to find the very best trades to post together. I'm kind of sad that I didn't on this Euro Aussie. I'm kind of sad I didn't post this one because this one is up 37 pips right now. And this would have been a really great trade to have taken together. So this one was based off of this mechanism, this last bar down before it took off. Again, pay attention to these things because this is the difference between making a lot of money and making nothing. Why did the market break out so strongly from that level? Who caused this? What caused this? Okay, so that's one place. The other place is I'm using this bar as another liquidity zone as an entry. So I may enter there, just depends on a couple of things. But I'd have to stop out of this trade first before I would enter into that one. But look at this, guys. So if this trade wins, it's a 224 pip win. If it loses, I lose 35 pips, right? That's really good risk management. All right, guys. So let's wrap up. We're going to take more of those trades. You'll get more trades from me like that for sure, especially on Monday. Make sure you're in the Telegram channel. For those of you that are new to the class and those of you in the recording watching who are new, make sure you're on the Telegram channel. I have two of them that you can join. I have my free one and then my paid one. Make sure that you're on both of those. If you're not on those, make sure you contact me, shoot me an email and just say like, hey, I'm not sure if I'm on it or whatever. I'll make sure that you are on it. Okay, guys, so let's talk about this before we wrap up, and then I'm gonna wrap up the class for the day. So yeah, with EuroCAD, again, with Banker's Close, we're done, pretty much done adding for the day. So I probably will get rid of these last couple of pending orders. I have a lot of pending orders on here for different things. It's the Euro CAD. I don't want this guy. And I don't want, is that the only one that I'm not in? Let's see. No, I don't want this guy. And I think that's it. Yeah. So basically I'm gonna let these sit. Hopefully they flow into these targets before the end of the day. If not, how do we put in a stop loss at the end of the banker's close? We go to MATAF, right? Come over to MATAF, which I'll put this link in the chat box for those of you that want it. You type in the currency pair you're trading, you search for it. We're trading the Euro CAD, and, and then you click on it. Sorry guys, I'm not sure what's going on with my voice today. You find out what the volatility is, ATR, for that day of the week. So we're on Friday. This is the Euro CAD. It's 125 pips. So what you do is you type in 125 pips into the calculator, you divide it by 4, and that's your stop loss. So we have a 31 pip stop loss on the Euro CAD to end the trading day. So what we want to do is make sure that these stop losses are 31 pips away, 32 pips away from the current price, which would put us right here. Let me draw a line. So that is right there. And that's your max stop loss. This will protect, I mean, yeah, it's just, it would sting if you lost, but it's not, it's going to protect you against some major crazy thing that could happen in the market, right? That's what this is for. I am debating on closing that Euro pound trade. I don't know. I kind of like to let them run all the way to their targets if I can. So I'm really thinking about it. I'll let you know in Telegram, but I haven't made a decision yet. And then I probably won't, well, I'll see if I find a trade that I'm like, yep, we want this. I'll send out more of these types of swing trading setups if I see something I really, really like this weekend. But in all, just plan on Monday getting a lot more signals and, you know, going into next week. So we had a lot of good trades this week. We had some bad trades this week. I think with these tighter stop losses, we'll lose less in terms of pips. Keep that in mind, guys. One quick thing I want you to be aware of. So with these tighter stop losses, naturally we are going to have more losing trades, but they are going to be smaller. So hold on to that fact. When we win, the wins are going to be astronomical. So I need you guys to hold out for those big wins because I'm teaching you guys how to trade things differently. Like I grew up in a place, and it's honestly not that good. Where when I first learned to trade, I always learned to have these massive stop losses with these tight targets because the goal at the place I used to work at was to create income. Like they wanted to show you how to make money every single day without, you know, just every day make money. But the problem is that on the day where you get that market condition where the market just flies against you, because you know those exist, right? Then there really wasn't a way to manage those losses. Like you'd have such a big loss that it would eat up all the profits you made in the last 3, 4, 5, 10 days, 20 days. And so although it was really fun and it was a fun ride to go 10 days in a row with just profits, because the stop loss was so wide, it's just like, it doesn't make sense to trade this, right? So hang with me. And I feel like most retail traders come from a background like that. If you've been trading for a while, it's like, you know, hey, how can I win every day and have these, you know, tight take profits just to ensure that I win? We're going to change that. We're going to be focusing on much bigger targets, very selective trade setups, tighter stop losses. So, but like, guys, think about that. If your win is 6 times, 5 times, 4 times bigger then your loser. You can handle a lot of losers in a row before you'd become unprofitable. And in reality is you probably would make a lot more money um, doing that. Imagine if like you only won 30% of the time, but you're 5 to 1. You're 5 to 1 reward to risk ratio. You're winning 5 times the amount that you're losing, or 3 times the amount you're losing. Even if you only win 30% of the time, 40% of the time, you're an extremely profitable trader, extremely profitable. But if you're that guy, and I've totally done this, I remember I was at a conference, just real quickly, guys. So I was at a trading conference back in 2016, and I remember we were having a break in between presentations, and this one guy, bless his heart, right? Like he just said, he was coaching this person next to him. There was just two students teaching each other, which is great. But I heard him say, if you just have and I'm quoting him exactly how he said it, if you just have a 2 pip take profit and a 100 pip stop loss, you'll never lose because the stop loss is so far away. That was his rationale. And this lady just nodded and she was like, yeah, that makes sense. Of course. No, guys, that doesn't work. Like, I know you'd think you'll never hit your stop loss, but you will. Like, there will be that time where you do. Yes, I will tell you it is true. If you have a 100 pip stop loss and a 2 pip take profit, you will hit your take profit most of the time. But that does not mean you'll be profitable. In fact, it almost guarantees that you won't be profitable. So I feel like us as humans, we really want to be right, almost more like the sensation of being right almost is more than the sensation of being profitable. It sounds crazy, but it's true. Like we actually have that innate. So we have to change that. We're like fighting against our natural tendency with a lot of these trades. So I want to teach you guys to um, focus on having bigger wins, and I'm going to help you do that. Have smaller losses, but I need you guys to stick with me when you have a small loss and multiple in a row, and then hang out for that big win. That's what's gonna pull you through. Like guys, today I've had multiple losses, but look, I'm up 1.6% on my account. Bigger wins, right? Bigger wins. All right, guys. So we're gonna let this trade sit, let it do its thing. I'll let you know about the euro pound. Also, welcome, Jared. Good to have you here, and anybody else in the recording. Welcome. We're excited to have you part of the program. And then, yeah, I'll let you know on Telegram what we're gonna do, and we'll see you guys on Monday. So enjoy your weekend.